10-year note yields remain stubbornly low, haven't traded above 210 in over a week. We were just kind of flirting with that 2% today. We didn't really have a chance to get south of there, but we've been south of there this week, and we are going to test it again before too long, despite the fact that we've got G20 coming up, which could rectify some of the short-term risks, that being what we're seeing out of the U.S. and the Chinese trade deals, which haven't yet gone through, and we keep hearing more about tariffs and threats and whatnot. And I think that we're visually seeing that in the equity trade more than we are in the bond trade, but I think that's also part of the bond bid that we've seen over the last several months. And I think that at this point, we've talked about it before, since November of 16, the market's rallied from 185 yield up to 325 and now back down to 2%. And to come full circle, I think would bring some closure and some sellers, more importantly, into the market. I don't know if we're going to see those sellers. Still remains a tremendous amount of demand for U.S. Treasuries, one of the reasons why we continue to see the market unable to see any down price or up moves in yield for any sustainable period. And if you look at market volatility, it's kind of hovering down in the lows. It's not all about fear here. This isn't like, well, the market's relaxing despite the fact that we've got meetings and employment next week and a holiday. I think at this point, the market's remained at this 2% level. So you may be seeing some modest exiting. But again, there is demand there. So any sellers are being met quickly with buyers, whether it's foreign countries, whether it's foreign central banks, whether it's corporations, whether it's individuals, whether it is hedge funds, you name it. There is definitely a void there that needs to be filled. And so those that have been holding on to these bonds for a long time and maybe don't want to wait the extra 15 basis points in yield are looking to get out now, maybe put that money to work somewhere else, maybe where they can do some more good with it in the short term. So the fact that volatility is lower is not reflective of the market, I think, not being aware of all the uncertainties that are ahead, because there are quite a bit of them with the Fed and the Chinese-U.S. trade deal right at the top of that list. Speaking of the Fed, the Federal Reserve came out after the June FOMC. The market really started to more aggressively, I should say, price in rate hikes for 2019. And right now the market stands at about 75 basis points, just a hair under. I think that we heard from several Fed speakers, one of them being Chairman Powell, trying to talk back those expectations. I don't necessarily think the Fed doesn't believe they could cut rates 3 times this year, but they certainly don't want the market to be pricing any more aggressive cuts coming. Let's get through July. Let's get through the September meetings. I think they were looking to maybe go quarter, and then let's kind of wait and see what happens. But the market's way ahead of it. And at this point, we've seen the Fed come in and talk back some of those expectations, or attempt to, because the market's still pricing in 75 basis points, even though the Fed is saying, whoa, let's wait and see what the data tells us. Let's wait and see where inflation is. Let's wait and see what happens with the global growth and the global economy. So there's a lot of what ifs out there, but the market has been holding strong while the Fed continues to try and maybe tug back a few notches on that tension rope. So right now, the bonds remain at 2% the 10-year. They're not going anywhere ahead of G20. Possibly could get a little bit of a relief sell-off after, but at this point, with the holiday next week and employment on the Friday after, it looks like things are going to remain status quo for at least the next week or so. And if we can get a U.S. trade-China deal through, I think that benefits all markets. But at this point, it doesn't look like any clarity is going to come. We can always hope for something out of Osaka and Japan when they have this G20 meeting this weekend. But at this point, it looks like we'll maybe just get a pullback on the tariff talk, and that may be enough for the short term to keep some of the fear mongers at bay.